Hey everyone, welcome back to Mark Capital World. I'm Mark, and today we are talking about real estate investment in America, specifically for people who already have a full-time job. Here's the question I get asked more than almost anything else. Mark, I work 9 to 5, I have a steady paycheck, can I actually invest in real estate? The answer is yes, and not just yes, it may be the smartest financial move a working American can make right now. Because here is the reality: the average American worker earns $59,380 for a year. That paycheck covers the bills, but it does not build generational wealth. Real estate does, and today, I'm going to show you exactly how to get started even with a full-time job, even without being rich. And even if you have never bought a property in your life, why real estate is the best investment. Let me give you some numbers first. Over the last 25 years, U.S. home values have increased by an average of 4.3% annually. The median home price in America in 2000 was $119,600. Today it sits above $420,000. That is over 3.5 times your money in 2.5 decades. But here is what makes real estate different from every other investment. You can use leverage. You put down 20%, say $84,000 on a $420,000 property, and you control the entire asset. If that property appreciates by 5% this year, that is a $21,000 gain on your $84,000 investment. That is a 25% return. You cannot get that from a savings account. And while the property grows in value, a tenant is paying your mortgage. You are building equity every single month with someone else's money. This is why real estate investment has created more millionaires in America than any other asset class in history. Now let's talk honestly about the challenges, because Mark Capital World does not sugarcoat anything. Most working Americans have three main fears about real estate investment: time, money, and knowledge. On time, you work 40 to 50 hours a week. You do not have time to become a landlord. I hear you, and I am going to show you strategies specifically designed for people in exactly that position. On money, the average down payment for a conventional investment property in America is 20 to 25%. On a $300,000 property, that is $60,000 to $75,000 upfront. That sounds impossible until I show you the programs and strategies that allow you to get started with far less, some as low as 3.5% down. On knowledge, most people never invest in real estate simply because nobody taught them how. That ends today. Let's go through this step by step. Strategy number 1 is called house hacking, and it is the single best entry point for any working American getting into real estate investment for the first time. Here is how it works. You buy a duplex, triplex, or small multi-family property. You live in one unit and rent out the others. Your tenants pay your mortgage and in many cases your entire housing cost, while you build equity and gain landlord experience without quitting your job or becoming a full-time property manager. The numbers are compelling. A duplex in the Midwest can be purchased for $250,000 to $320,000. With an FHA loan, you can put down as little as 3.5%. That is about $8,750 to $11. 201 rental unit at $1,200 a month covers most or all of your mortgage payment. You are essentially living for free while someone else pays down your real estate investment. Strategy 2 is the classic real estate investment play: buy and hold. You purchase a single-family home or small multi-family property, rent it out, and hold it for the long term. Let's say you buy a $280,000 single-family home in a growing market like Columbus, Ohio, or San Antonio, Texas. You put down 20%, which is $56,000. You rent it out for $1,800 a month. Your mortgage, taxes, insurance, and maintenance costs average $1,400 a month. That leaves you $400 a month in positive cash flow of $4,800 a year, while the property appreciates and the tenant pays down your loan. Over 10 years, assuming 4% annual appreciation, that $280,000 property is worth approximately $414,000. You have gained over $134,000 in equity, collected nearly $48,000 in cash flow, and your tenant paid down a significant portion of your mortgage. That is real estate investment working exactly as it should for a working American. Strategy 3 is for the working American who wants exposure to real estate investment but is not ready to buy a physical property yet. That strategy is REITs Real Estate Investment Trusts. A REIT is a company that owns and operates income-producing real estate apartments, office buildings, shopping centers, warehouses. When you buy shares of a REIT, you become a partial owner of all those properties by law. REITs must pay out at least 90% of their taxable income as dividends to shareholders. The Vanguard Real Estate ETF, ticker VNQ, has delivered an average annual return of around 8 to 9% over the last decade. You can start investing with as little as $100. You collect quarterly dividends. You face no tenants, no repairs, no property management for a busy working American. REITs are the lowest barrier entry point into real estate investment that exists in this country. Short-term rentals and Erbstrate for is short-term rentals. The urban and VRBO model, and it can generate significantly higher income than a traditional long-term rental in the REIT market. A property in a tourist-friendly city like Nashville, Scottsdale, or Charleston that rents for $1,800 a month as a long-term rental can generate $3,500 to $5,500 a month as a short-term rental. That is nearly double or triple the cash flow on the same real estate investment. The trade-off is management time and effort, but here is what most people overlook: property management companies that specialize in short-term rentals exist in every major market. They handle everything from guest check-in to cleaning to maintenance for a fee of typically 20 to 30% of revenue. As a working American, you collect the income and keep your day job. The real estate investment runs without you. How working Americans finance real estate investment. Now let's talk about financing, because this is where most people get stuck. The most common real estate investment loans for working Americans are conventional loans requiring 20 to 25% down, FHA loans requiring as little as 3.5% down if you own or occupy, and DSCR loans, debt service coverage ratio loans, which qualify you based on rental income rather than your personal salary. DSCR loans are a game changer for working Americans. If the property generates enough rent to cover the mortgage, the lender approves the loan regardless of how much your W-2 says. Your $59,000 salary is not the ceiling, the property's income potential is. One more powerful financing tool: if you have a 401k, some plans allow you to borrow up to $50,000 or 50% of your vested balance for real estate investment purposes. This is not a withdrawal, it is a loan you repay to yourself with interest. It is a way to fund a down payment without liquidating your retirement account or paying penalties. How working Americans finance real estate investment. Now let's talk about financing, because this is where most people get stuck. The most common real estate investment loans for working Americans are conventional loans requiring 20 to 25% down, FHA loans requiring as little as 3.5% down if you own or occupy, and DSCR loans, debt service coverage ratio loans, which qualify you based on rental income rather than your personal salary. DSCR loans are a game changer for working Americans. If the property generates enough rent to cover the mortgage, the lender approves the loan regardless of how much your W-2 says. Your $59,000 salary is not the ceiling, the property's income potential is. One more powerful financing tool: if you have a 401k, some plans allow you to borrow up to $50,000 or 50% of your vested balance for real estate investment purposes. This is not a withdrawal, it is a loan you repay to yourself with interest. It is a way to fund a down payment without liquidating your retirement account or paying penalties. 5 real estate investment mistakes working Americans make before you go out and buy your first property. Mark needs to warn you about 5 mistakes that derail first-time real estate investors in America every single year. Mistake 1: buying in a bad market because the price is low. A $90,000 house in a city with declining population and no job growth is not a deal. It is a trap. Always invest where people are moving to, not away from. Mistake 2: underestimating expenses. Budget for vacancy at 8 to 10%. Maintenance at 1% of property value per year, property management at 8 to 12% of rent, and capital expenditures. Many new real estate investors calculate only the mortgage and forget everything else. Mistake 3: Over-leveraging. Do not drain every dollar you have for a down payment. Always keep 3 to 6 months of mortgage payments in reserve. Real estate investment rewards patience and punishes desperation. Mistake for skipping the inspection every single time. No exceptions. Mistake 5. Emotional buying. Real estate investment is math, not feelings. If the numbers do not work, walk away. Another deal always comes. Mistake 4. Skipping the inspection every single time. No exceptions. Mistake 5. Emotional buying. Real estate investment is math, not feelings. If the numbers do not work, walk away. Another deal always comes. Your 90-day real estate investment action planner is the 90-day action plan Mark Capital World recommends for every working American ready to start their real estate investment journey. Days 1 to 30, hit your finances in order, pull your credit score. You need at least 620 for most investment property loans and 740 for the best rates. Calculate your debt-to-income ratio, open a high-yield savings account, and start building your down payment fund automatically every paycheck. Days 31 to 60, research your market. Pick 2 or 3 cities within driving distance or in strong growth markets. Study average rent prices, vacancy rates, median home values, and local job growth. Use sites like Zillow, Redfin, Rentometer, and the U.S. Census Bureau to build your picture. Days 61 to 90, connect with a real estate agent who specializes in investment properties. Speak with a mortgage broker about your financing options, including DSC or loans, and run the numbers on at least 5 real properties using a real estate investment calculator. You do not need to buy in 90 days. You need to be ready to buy when the right deal appears. Real estate investment in America is not reserved for the wealthy, the retired, or the full-time investor. It is available to every working American who is willing to learn, plan, and take one step forward. The Quick Bro job gives you the income, real estate gives you the wealth, and together, they give you the freedom. Whether you start with house hacking, buy and hold rental, or right portfolio, or a short-term rental, the most important move is simply to start, and fox jumps over the lazy dog. I'm Mark. This has been Mark Capital World. If this video gave you a clear picture of how real estate investment works for working Americans, please hit subscribe. Leave a comment telling me which strategy you want to try first, and share this video with one person in your life who needs to hear it. I'll see you in the next one.